What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. In today's episode, I'm joined by Don Phillips. He's a seasoned trader with a career spanning from the trading pits of the CME Group to modern electronic trading. In today's episode, we'll dive into Don's trading background and explore how adaptability has been key to his success in being able to both survive and thrive across various market conditions. We'll also discuss why letting go of your bias is so crucial and how being fixated on what you think the market should do can hinder your ability to capitalize on current opportunities. Let's get started. Today's podcast is sponsored by FTSE Russell and TradeStation. FTSE Russell is the home of the Russell 2000 Index. Did you know that with an 81% share and 1.5 trillion in institutional assets benchmarked, the Russell 2000 is the top choice by far among institutional investors. Like all Russell US indexes, it's rules-based, transparent, and reliable, regularly updated with the latest IPOs and annually rebalanced. To learn more about FTSE Russell and their products, please go to FTSERussell.com. As a futures trader, you can leverage your portfolio even more thanks to TradeStation's reduced margin rates across popular futures products. Enjoy intraday rates as low as 10% on select U.S. index futures. TradeStation is also cutting margin rates in half for popular energy products, crude, heating oil, gasoline, and their associated minis. Open an account and access over 600 CME Group futures products and customize your trading strategies on a sophisticated platform built for advanced traders. Visit tradestation.com/Anthony to learn more. Donnie, welcome to the show, my brother.
Thank you very, very much. This is going to be fun.
I'm super excited about it. I mean, you're one of the few guys that I could have this conversation with where, we came from that background of the pit and we've made this transition, where we're all in our homes now and we're all on the screens and you were there before I was. And you actually were in the Eurodollars, different pits than I was, but I think we should just start there. Just give everybody your background and the pits that you were in.
Okay, so I dropped out of college I got a summer job after freshman year in college on the floor as a runner. And at the end of the summer, my now brother-in-law his badge was SNP. I was dating his sister in high school. He needed a clerk and asked me if I'd come clerk for him as a secondary clerk. And I was like, all right, this is really cool. There's a lot of people making money. I think I can live with this vibe. So I dropped out of college. My old man was livid. And I took a job learning how to clerk in the TBill Pit. It was 1984. The TBill Pit was a small world back then. It was, old school original brokers, the guys at Plaza, the guys at Dean Witter, the old Hutton guys, the Merrill guys, the Morgan guys. I was literally just at a wedding for an old friend of mine out in Utah this last weekend or 2 weeks ago. And I ran into the wife of the guy that ran the second in charge of the Morgan Stanley desk. And he couldn't be there. Bobby Lamy couldn't be there, but his wife was there. And we just started laughing about things that we heard 40 years ago or did 30 years ago. So I stayed with this group. It was the Fox Deluxe Trading Group. And Fox Deluxe was, Old Man Joe was a filling broker in the Belly's Pit. He had 3 sons that were traders, one in currencies, one in Eurodollars, and one that just kind of floated around. So I worked with the old Fox group, and they literally were in the meatpacking business back in the day. And then Old Man Fox got a membership probably in the 60s. And he developed it into a brokerage firm, a clearinghouse for a little while. He still had the meatpacking business. There's still Fox Deluxe food trucks driving around Chicago. They sold the business and all. But so we had a Eurodollar presence, a Swiss franc presence. Johnny ran around everywhere. And then we had a Belly's presence and a Hogs presence. And so I would float. I learned out trades. I did belly out trades. I did Eurodollar and T-bill out trades. I clerked for a couple years for these guys. I did all the out trades because you don't make any money as a clerk, right? You're making $200 a week, $300 a week, and so I'd be like, okay, if I can get $75 a week here doing your out trades and $50 a week doing your out trades, okay, cool. I can actually maybe afford to pay for the gas or the plane or the train ticket to get to the floor. And so I did that for 2 years. Developed some really great contacts. I developed a business relationship with the head of the Solomon desk, the Plaza desk. Developed a relationship with the guys at the Merrill desk and the Morgan desk. And then I was a sniper. I just clerked and picked up as many orders as I could in the bills. And that's when the bills split from that small little T-bill pit with the little tiny Eurodollar pit to the big expansion, and they double-sided the pit. So you could trade the Eurodollars and the T-bills from either side of the floor. And it was like it was the beginning of Thunderdome for the Eurodollars when the euro started to really take off. So the T-bill pit was on the far left side on the far right side as you were walking onto the floor, and then it was the Eurodollar pit, and that was really starting to grow. Then it was LIBOR, and I was situated on the front side of the main old pit, and then when they split the pit, I went to the back side so that I was facing towards the spoos in the front of the house of the Merc. And I went over there specifically to watch Plaza. And at that point in time, the clearing firm was like, you probably need a seat so that you can execute, because we didn't know quite how to transition from literally just turning around and whispering to your broker to sell 100 or buy 100 to how do we execute arbing across a pit after getting an arb. So they didn't want that latency. So they said, we need to get you a full membership at that point in time. So I had to scramble. I had to beg, borrow, and steal from my family members and my grandfather and get my $25,000 T-bill. And they said they would pay 50% of the lease price for my monthly seat lease. And then so I went into the pit. I'd had the blue badge a little bit earlier just because they needed it for Top Step access. But to get the IMM meant that I could actually trade my own account, live open outcry, and fill customer orders. So I went in full IMM in like August of '87, right before the crash. And so I stood on the backside of the T-bill pit, overlooking the Eurodollar pit, right next to the TED spread, and watching all the options traders in the back month Eurodollars trade the reds against the whites. And they didn't go a whole lot further back out than they did, but not a whole lot. It was very illiquid at the time. So that's literally the environment that I grew up learning to trade the rates market, the stir market. So it's 1987. We make a killing I make a killing, six figures on that Tuesday, and I basically slept at the Merc for the next 3 days doing out trades. On Friday, we took the guys from the Merrill deck to the Chop House. Oh no, to the Palm. We took them all out for a steak dinner at the Palm. The reason being was my filling broker. There was two crazy stories from that day. My filling broker's partner executed an order backwards on the open on the day of the crash. And it was a 200 lot in the T-bill pit. And the T-bills had a 1.5, 2-point move that day. It ended up being about a $900,000 winner. And he didn't even know he had it. He didn't even know he had it. We figured it out at about like 11 o'clock in the morning. We're like, dude, you reverse filled this. You're short 400 at the top. And he's like, what? And so that was one. My true boss was stuck on 150. and he was upside down about 400K. So we got almost $1 million winner, and we got a $400,000 loser, and we're just sitting there with the deck, and you know the old days, right? They would be like, "Hey, take out a card." So everything kind of cleared up. The guys at Merrill were amazing. They were like, "Just wait, market's starting to stabilize. Just give it a little chance. We'll get closer. We can limit this liability. You're still held, but we're going to make it work." And so market kind of stabilized a bit in here. We found a bottom. The market came back up a little bit, and we literally liquidated everything. It was a huge win. Those guys made a ton of money. Um, I got a little bit of the take a card out. I sold you 25. I bought 25. I sold you 10. I bought 10. So that was pretty fun. And then I just did out trades for 3 days. So we're at the Palm. We're eating dinner. We're drinking beers. We're drinking wine. We're drinking martinis. And I'm with a guy who was one of the other clerks. And I'm like, "You want to take a vacation?" He's like, "What do you mean?" I'm like, You want to go to the airport right now? Let's go to Florida. Let's go to Miami." So we literally called the girlfriends and we're like, "Pack a bag. We're going to Hawaii, or we're going to Miami right now." So we ended up in Miami. I ended up hooking up with a guy that I knew in college who was dating a gold trader who was a shooter at Morgan, or no, at Goldman. And there was like six of us, and we just took over a hotel, like 6 rooms at the hotel, and just had a rocking weekend. And then flew back to Chicago and went back to work. So a couple of months later, I'm like, "All right, you know what? I'm a shooter now. I know everything I need to know. I'm gonna go. I'm gonna go independent." And I made it about 9 months. I didn't have a system. I didn't have a process. I was trading entirely instinctively. I was trading entirely on the bid and on the offer. And there was a lot of volatility back then. So I had to take a humble step back and go back into the pits as a clerk and relinquish my seat. Fox guys had already replaced me, so they didn't need me back. So I ended up transitioning back through my contacts at Solomon Brothers, and they're like, "Well, one of my brokers in the Euros needs a clerk." So they hooked me up with a guy. His name was Peter Burgess. I worked for Peter, but Peter decided about 6 months later he wanted to retire. And so the guys on the plaza desk were like, "Okay, Peter's going to retire. We need a new filling broker." Now, this is where PAX comes in. "We want you to go talk to PJM." Pat was one of the board of governors. And so Pat and I sit down, we have a conversation. He's like, "You bring me the plaza business, I'll put you back in the pit." I'm like, "Okay, we got to make some money. We got a job to do." So now I'm in the front month Eurodollars, managing the plaza business. I'm trying to pick up some other customer business. Murphy's Group, Jimmy Dubois was over there at Goldman, some other people. The Morgan guys were on that side of the floor as well. So I pulled all my old relationships from 3 years ago, and now I'm that new star clerk in the front month Euros. And I've got this kid to like three people down from me, and he's working with Keg and SRG, and he's like their number 2 clerk, and he's assigned to watch Plaza. So now I'm looking to my left where Sally was. Pax is to my left on the same line step as I am. And so I'm literally their primary clerk. Pat's their primary broker. Pax is trying to steal my biz, and Keg is his filling broker. So we're playing games all the time. And the guys on the Plaza deck, I mean, Plaza was a huge account back then. I mean, they would take 20,000 Eurodollars out in a day. So there were days where Charlie, the guy on the desk, would call me over and he'd be like, "They're front running my orders in the pit. Everybody's front running my orders in the pit. So if I touch my nose like this and I grab my tie, that order's coming in backwards." He's like, "I'm going to arb it in backwards, and we're going to screw with all these guys." So they'd literally put in you'd be like, pay 5 for 2,000. And then Charlie would go, and I'd be like, sell 2005. And all the brokers that were leaning with ticks with 5, 4.5 or 5 for 1,000 are now racing to bid it up. And my broker behind me is like, sold. And they're like, wait, what just happened? So I remember days where Matt's broker would literally turn around and give him the scowl of death. Be like, I'm going to kill you. What just happened? Why are you giving me bad information? And we would do this like on and off these crazy baseball signals all the time. So the short answer to that is we had a blast. That was probably 1989 to 1990. At the end of 1990, Pat was getting married, and he said, it's time for you to get back into the pit. You've given me 2 great years. There's probably a nice 7 figures that he made over that window of time. And he's like, I'm going on my honeymoon. Here's a blank check. Go get your seat. So I literally went down to membership with his check, wrote it out for 100 grand, handed it to membership, handed my check to First Options for deposits, loaded my account, and went back into the pits. And that was at the beginning of, that was January 1991 that I went back into the pits. And I decided to go into the 3rd and 4th month Eurodollars because it was a wild, wild west. I actually had a spot. I had the highest step in the back months because nobody wanted it. They all wanted to be in the middle, and the brokers were all on the edges. And so there was the normal, 1 step up, 2 step up, big wide step for the brokers to be on, 2 steps, 3 steps down. But the T-bills were 4 steps up. So I stayed right behind the T-bills, or right in front of the T-bills, looking into the pit. And so I could see the entirety of the Eurodollar pit. I could see the beginning of the NASDAQ pit. I could see the options pit starting. And I had the T-bills and the TED spread behind me. And that was my old stomping grounds. I knew everybody. So I could see both sides of the pit from the order entry. I could hear everything and I could see everything. And I had the 2, the 5, the 10, and the 30-year bond screens right in front of me. So it was literally the greatest spot on the floor that no one realized existed.
I want to talk a little bit about just the history here. I mean, just to get some people caught up. It's easy for you and I, we're getting caught up right now, in our lives and in the history here. It's awesome. Early 80s, you were just right at the beginning of when we actually moved to Wacker. Not we, I wasn't on Jackson, but so the CME moved to Wacker, right? So you were there right as CME came off Jackson, right?
Yeah, pretty much. I missed the opening by like 3 months, I think.
Yeah. And so that was the
yeah,
beginning
it was
CME that everyone knows of today. That was, when people do a lot of these shots. And then you had, and I just want to go back a little bit just to kind of give everybody some perspective of all the things that you've seen. So you were there for that 87 crash. We all know what that was. And then during that time, you had all of the major CME markets, all of the CME markets are on one floor. And a lot of
Yep.
people, like I came in 95. At that point, we were already split. And so you were at the center of the universe there.
Oh yeah. And I literally had, Charlie Turner over at Dean Witter at the Witter desk in the Euros bills. He had the highest, best spot in the entire floor. He could see the spoos, he could see the bellies, he could see the currencies, he could see the lumber, he could hear anyone last call anyone trading for butter. But I probably, as a local, had the best spot in the floor.
But that's also the beginning of the S&P too. I mean,
oh, absolutely. Absolutely.
We're going back to the beginning of the S&P 500 in the pit too. I mean, that's early 80s.
They used to give us buttons. Go spend 15 minutes, 5 minutes in the spoos. So I'd go hang out and watch the S&Ps and be like, what is this fucking hot mess? I have no idea what this is. And it was tiny. It was trading 300. It was trading 400.
Yeah.
It's not trading 5,400. It's not moving 100 bips a day. It was moving 5 bips a day. But the contract size was huge.
Yeah, it was doubles. People don't know that. We used to be half bid at doubles. And so actually one point was actually $500 when I first started. Then it went to 250. And so doubles, for you guys to understand what that means, is like it would be So half, so, Donnie and I would say half would be 50 at the last four. Then it would go 5, 55, 60, 65. So that would be doubles. 55 would be
Right.
double,
Right.
and so there was an extra tick in there that they don't see now.
Right. I mean, my left hand literally hurts because of doubles.
Yeah, doubles.
I mean,
Yeah.
I'm starting to get Merc trader arthritis at my age.
I want to talk to you about something though, because I know you and I we could do all day on this. I want to bring
Yeah,
some of
yeah.
this into perspective with everybody, because, and I think we actually need to do a spaces with me, you, Pax, and if there's a few others that we need to bring into this for this memory lane type thing. But for today's conversation, what I want to talk about is because I get asked this question all the time, and you and I, we love the history of this business. That's, you and I, we bleed this business. We love it.
Right.
And we were able to learn from a time where we had to go through those things that you had to go through, right? You went through being a clerk, a runner, an ARB clerk, trade checker, out trades. We understood everything about the business. How did that perspective from starting in that time help mold you into the trader that you became then and are today?
I think first off, understanding all of it, or at least experiencing all of it, gave you perspective. All of that lack of sophistication and electronics made it a period in time where your word was your bond, where how you acted, how you behaved in the marketplace was the key to you getting opportunities to trade the market with the players that had the paper, right? And then it was, can I be a person of character and get the trades that I want when they're really important? So then I had to learn how to move size. Then I had to learn how to trade flow, trade levels, and like TA wasn't a thing back then, right? There was no technical analysis. We traded off of CQG charts. We didn't have technical analysis. We're charting price levels and point and figure charts. And so you're like, okay. I mean, I went through a whole thing with that in the 90s. I literally got a trade station at the house. I had the CQG machine at the house. I had the Globex machine at the house. I fed everything into TradeStation. I played with neural networks. I had it wired up and hooked to a computer. I finally got a computer on the floor, which was amazing in like 95 and 96. And then I had it read me to a pager to tell me when a price level was wrong or when I hit a price level. But the reality was I spent all this time and all this money and all this stuff on computers, and I could just look at a chart, an old point and figure chart, and go, well, you know what, 94, 98 is probably a pretty important level right here. Let's see how it reacts to that level. I'm either going to buy a breakout or I'm going to sell a false breakout. And so I developed a trading style around similar to PAX, where I traded off of price and price action and opening ranges rather than trading off of technical analysis and trading off of Elliott waves or neural networks or high frequency trading or any of those things. But I think learning the business from the ground up, I learned to respect the trading environment as it was constructed back then.
A few things come to me is, integrity, accountability, and class. You
Hmm.
learn how to, we were taught how to become not only traders, but to become men.
Yeah.
Your word was so
Yes.
important. And if you were, a smart ass, or you thought you had a bigger ego, there was always somebody that made more than you. There was always somebody that was better than you, and I think that us surrounded by really a bunch of alphas, type A
Oh,
alphas. I
totally.
mean,
Yeah.
it puts so many things in perspective, and we learned so much respect, not only for the business, but for each other, and just what it really took to do it. I think that's something that's kind of where I want to go next with you, Donnie, because you're one of the guys who, I looked up to. You're one of those people that, came before me. And then, so I always, to this day, no matter what, I see guys like you, I shake your hand, and I thank you guys for, carrying it out of the wave to when I came in, and you see generations move forward now. And I don't see that out there as much, Donnie. And I'm curious, what do you see about the current marketplace and new traders coming in? And there's a lot of great ones, don't get me wrong. But what do you think maybe is something that for the new traders out there that are just opening accounts in 5 minutes and coming to the screen and calling themselves futures traders, what are some things maybe you think they should do or can do to develop those things that we talked about?
They're not going to like the answer that I'm going to say, but the first answer I'm going to say is they need to do some more work, more research, and do some paper trading. Before I get into what I do now, I left the floor in 2000. That was more of a political decision. That was more of a, we're going electronic and they're going half ticks and quarter ticks. And my risk is the same, but my reward is not the same. And I was like, okay, if we're going fully electronic, I want to transition now. And I don't think people recognize what happened to seed prices between 94 and 98 and 2000, where they really plummeted. And then the euro dollars kind of locked into a really small range as the Fed started to play games with rates. That was really the first time the Fed started playing games with lower rates and lower yields. I mean, it was the beginning of this entire 24-year cycle that may or may not be coming to an end now. But volatility disappeared in the marketplace, at least in the Eurodollar stir contract market. And it was really, really difficult to meet a huge nut and be profitable. So I transitioned off the floor, but I went into mortgage backs. And I had to go through a learning curve there. I had to gain credibility in that market. And then long story short is I ended up with a huge portfolio of stuff from GE that we couldn't auction off into the great financial crisis. So I left the floor for safer opportunities and ended up walking into a freaking snake's den. And literally in early '07, mid '07, I'm like, we're screwed. Everything's screwed. The mortgage market's screwed. How bad's it going to get? And I stuck it out and until the beginning of '08 when it all just went south. And then I was looking for another opportunity again, right? So I got a decent severance package. I got short the market. I still had money. I still had a trading account. I knew things were going to get bad. My friends didn't believe me when I told them how bad things were going to get. I ended up literally out of work with GE with a severance package, and I opened up my screens at my house for the very first real time. Like I had dabbled, I had an account, I played games, I did stuff. But now I'm focused on day-to-day day trading. And I got literally destroyed. Literally absolutely destroyed. 6,000 or six-figure donations, losing money, doubting myself. Everyone's been there, everyone's done that, that survived long enough to do this. And I was like, wow, I don't even know what to do. So to get back to the question that started that little diatribe, what I realized is all of the skills that I had learned on the floor, the emotional intelligence, the sensing and the feeling and the sensory information and input from the marketplace based on the conversations that you would have with brokers, with guys on desks, you had a relatively good idea of what was real and what was bullshit, right? You had a relatively good idea that that guy, Paul Tudor Jones, just did X, and he's a pretty good trader. And that idiot over at Nomura has no idea, and I don't know why he took the other side of that trade. And so you're now like, okay, that changes my entire perspective on the market. I know that Tudor Jones wants to do X. I can see Witter's right behind him. I can see Plaza's doing the same thing. And there's a correlation in the S&P, or there's a correlation in the SPOOs, or in the Eurodollars. I have a relatively good macro example of what's going on. Then you get on a screen in your house, in your pajamas, and you're like, fuck, I don't have any stimulus. I've got no knowledge. I've got no data. I've got no information. And now I want to trade price like I know how to trade price. Because I traded price because I knew where the levels were, and I knew where the volume was, and I knew where the interest was. So I knew the picture on the floor because it was in front of you. And now I'm looking at a screen and I'm like, It should hold here. There's a double bottom. And then boom, you're like, oh my God. And then I'd be like, well, do I buy more? No, don't buy more. And you're like, well, do I stop? I don't want to stop out. So I had absolutely no idea how to trade a fucking screen. And I'm like, okay, what do I need to do? And so my advice to new traders is find a system that works for you and keep it as simple as possible. And by that, I mean identify some price levels that work for you. Identify a market that fits your personality type. Are you type A? Are you a quant? Are you a math guy? Or are you a cowboy? Find a market that fits your style. Learn as much about it as you can and keep it as simple as possible. And so I literally went back to the opening range trade that I learned in 1985 at the Merc, from Dixie and a couple other old school guys. And then I was like, okay, now I need to develop a macro thesis. Okay, how do I do that? Right, what's the best way to express that? Well, in stir, in rates, it was okay, let's spread. Let's reduce our liability on intraday moves, but let's get the directional shifts that we think might occur to be positioned for. So I can avoid some of the noise and I can still capture the directionality of it. Let's scale down. Let's have tighter stops. Let's make sure we're emphasizing our profit target, our exit, and our entry before we enter the trade. Let's be cognizant of our limitations, my limitations. So I try to keep it as simple as possible. So I've developed a simple group of indicators that can be applied almost unilaterally across every time frame that I want to look at. And then I just literally zoom in and out of time frames. I really think that's the simplest thing that people can do is eliminate the noise. One of the guys I was working with was using Bollinger Bands and trying to apply it to my philosophies. And Bollinger Bands, they do this little constriction thing and then they blow up, right? And then the market rides the wave up or rides the wave down on the Bollinger Band, and then it comes back into a constriction zone. That's really noisy. If you look at that, it's really, really, really challenging unless you're really good at it and you've been doing it for a long time. It's really confusing. And then you get a series of instinctual disbeliefs where you're like, this market can't rally any further. This market can't go any lower. And we've all blown up an account doing that. We get that mental mojo where we're like, this is just stupid. There's no reason for this rally. This is ridiculous. And then the market just keeps creeping and just keeps going and just keeps going. And that's when traders blow out. They get an opinion at a moment where the market's on a run, and then they fade it, and then they try to defend it, and then they fight it, and it's 3 weeks later, they're down money, they're pissed off, they're not thinking clearly, and then they think they finally got that moment where they're going to get it all back, and you get smacked in the face. And now you just lost whatever it was, 5% AOM, and now all of a sudden you're down 15% AOM. And now you're into the bad spot. Now it's self-doubt. Now it's disbelief. Now it's I need a break. Now it's I don't know. I'm losing my confidence. And that's the tail that you've got to avoid. I would rather not trade than be involved fighting a system. So I think Matt says this a lot. If it's not easy, I don't want it. I'm probably more macro than Pax is, but that's just because I grew up in the stir world.
Your markets are, I mean, it's hard to be macro in S&P and NASDAQ.
Right.
It's not the easiest thing in the world.
No. So I mean, right now we're dealing with the FOMC and what's the Fed going to do? So I mean, I don't know if you were watching Twitter this weekend, but everyone was like, "Is QE debt monetization?" And you know what? QE ended 2 years ago. It really doesn't fucking matter. The Federal Reserve is going to do whatever they can to avoid a crisis at the moment of crisis. That's all you really need to know about the Federal Reserve.
So I want to talk about more about your experience and your challenges to moving to the screen, because the one thing that is common, whether or not people want to talk about it on the highlight reel, which we call X, everyone talks
Mhm.
about all their great moments, right? It is a difficult time to trade, and it's never easy. Let's put it that way. There are some times that it does get a little clearer, but I want to talk about how you were able to be at the center of the universe, like we talked about, make the transition to the screen. We talked about that rough patch and how difficult it was, simplified it. You got yourself a system. You believe in the system. You want to trade the system. Like you said, if it's not easy, I'm not going to do it. But now we have different market environments all the time, Donnie. And then that's the one of the things that I see as a constant challenge for myself to recognize that even with my past experience, all the years I've been on the screen, it is pretty incredible how quickly we go from market environment to market environment change. And part of it you kind of touched on, just like the pure speculation of what people are going to do with what's going to happen with the Fed. And it changes market dynamics. It's like we go from, you know, almost bear market feel like the world's going to end to like we're in the strongest bull market we've ever seen, and how it's like then you get into these consolidations just like that, and we're shifting back and forth quicker than I've ever seen. How do you stay on top of that?
I have a couple of follows that I really like. Pinebrook, David Cervantes. David's a great guy. One of the smartest macro guys I know on the planet. We became friends a couple of years ago via Twitter. He's got a very simple philosophy. He believes we are in a really upward trending market. A lot of it has to do with the Inflation Reduction Act and the amount of money poured into the system. He focuses heavily on home builders, new residential construction. He believes we're in a disinflationary environment, and he believes that slowly but surely this inflationary piece was driven by excess capital in the system, and it is slowly being managed, understood, applied. So that is basically, from an ES standpoint, from a SPOO standpoint, that is a positive contributor. So now we are looking at the larger macro question of, are we in a situation where we get a second round of inflation? We have a Fed that doesn't want to go back to ZIRP. They don't want to go back to zero interest rate policy. They think it's completely ridiculous to do that now. I think it's ridiculous to go back to it. I think it's ridiculous to go back to QE. I think the Fed funds rate is going to stick somewhere around 3%, 2.75, 3.25 over the next 7 years. So if you're waiting for the market to give you a 2% or a 1.5% Fed funds rate, I think you're going to be waiting a really long time. What we're dealing with right now is the complete uncertainty of the projected path going forward. And it goes more to, can you filter out the negativity that we're seeing in society, right? Because we're so fractured as a society. You're either red or blue. You're an inflationista or you're a depressionary. You're market crash or all-time highs. You're Bitcoin maxi or you're, GameStop motherfucker. It's we've compartmentalized so many things, but you really just need a broad-based experience education to say this market isn't like any other market. It's not 1929. It's not 1987. It's not 2000. It's not 2008. It's not COVID. This is a new regime, a new marketplace. And so for me, that's why I really like the standard deviations and the mean reversion thoughts, because I can check my perspective against my emotions. And you've got to be able to manage your emotions, right? And we're fortunate, right? I mean, we're little guys trading our own accounts. We can be in the market, we can be out of the market, we can be quick, we can be nimble. We don't have to be married to anything. We don't have to manage other people's money. We don't have to say, okay, I've got 6 billion under ALM, and I've got to hedge this risk for that, for these little old retirees in Dubuque, Iowa. You know what I mean? I don't have to be perfect on a macro level. I just have to figure out what I think is going to be the next short-term trend, and how do I get on board? And then how do I avoid losing money? So the old arguments of old term premium, the old arguments of it's 1978, the old arguments of it's the 90s, none of it's applicable in its totality. You can take pieces from it and you can try to build a picture of what's going to happen going forward. And then you look at what's actually happening in the underlying stock market right now. We've got really good buybacks. We got strong underlying earnings. Yes, our multiples are high, but we've got inflows on passive basis. So we got buybacks and passive. That's a net positive, right? We've got decent earnings. We've got decent outlook. Inflation is trending down. Why would you not be involved on the long side with some protection opportunities if the market decides to shift? And then if you look at it on a longer time frame and you go to mean reversion on a standard deviation, you'll pretty much see where you might want to buy a put, or you might see where you might want to take a flyer on a new long or a new call. And I think we're on a quarterly, on a 2-month basis, standard deviations channels of 2 to -2, 1, and 0 are working really well for showing you when you shouldn't overreact, when you should consider adding or lessening a position. And then you've just got to avoid the Twitter noise, right? The live feed noise, and cycle down into the people that you can have some confidence with. And then you got to go touch some grass and breathe and go for a run or go for a workout or go have a meal or come to Tonality and have a beer and kind of just like say, okay, that's enough me thinking too intently today. But what I see is I see people digging in and taking these huge mental levels where they want to be right. You didn't know they're right. And we know that doesn't really happen that often, right? We're just, surfing. We're just surfing markets and trying not to get our asses kicked.
Yeah, and you know what, you say go out and touch grass, and it's funny, going back to where we came from, we really disconnected when we walked away from the floor. That was, I think, a major difference for us for mental health,
Oh, yeah.
and long-term survival of markets, because if you try to stay engaged with these markets all the time and you try to think too much, that they will wear you down. And it really does bring me to my last question for today, Donnie. What do you believe is the key to long-term survival and long-term success as a trader?
Humility is key. Self-confidence is key. A system that you believe in and the adaptability and the curiosity to continue to look for new systems and understand why there might be better reasons or there might be better ways or why your way is moving away. Stubbornness is probably the most interesting thing that I have noticed because we knew so many guys, right? We knew so many people, and so many of them became stubborn in their views, in their outlooks, in their perspectives. So, can you be flexible and learn something new? So, if you're the kind of guy that can say, you know what, I want to learn how to cook, I'm going to learn how to cook. You know what, I want to learn how to play piano, I'm going to go learn how to play piano. I want to paint, I want to paint a picture. I want to learn how to drive a race car. I want to learn how to build a car. I don't know. I want to power spray a driveway. Whatever. Go find something that entertains you, that inspires you, that gives you creativity. And we didn't touch on this, but between GE and me really getting into day trading, I took a sabbatical and I went to culinary school for 14, 16 months. And I did an abbreviated program. I did double classes and I did an associate's degree in almost half the time. And then I went out and cooked. I went out and cooked in some country clubs. I cooked at some great restaurants, and that's what gave me the confidence to set up one of the businesses I have now, which gives me a lot of flexibility and creativity. I have a organic school food catering company. When I left the floor in 2001, my wife and I started a Montessori school. So I've got cash flow from those two businesses. And those two businesses and my trading gave me the confidence to jump into this brewery thing. So I say, take your profit from the market and figure out something else you can do with it. Can you create something with it? Can you monetize that capital some other way? I mean, now you can actually get a yield, right? So if you got 7 figures you got 6 figures a year now. It may only be mid fives, but you still got free cash flow if you got 7 figures. And if you were fortunate and you bought your seat and you held your seat and you got your cash, maybe you got a couple $1,000,000 from selling your seat prop rights and stuff like that. Now you've got a cash flow thing where you can start to take the pressure off and you can start to be living your life. I mean, I remember I walked off the floor probably 4 days a week after breakfast. My buddy CJR and I would go have breakfast across the river every single day after we got through the numbers, pretty much bar none. Would talk about life, would talk about markets, would talk about kids, would talk about our futures. Would eat breakfast. I'd go back, I'd trade for an hour or two, and then I'd go play golf. And to your point, I didn't think about markets. I didn't pick up Twitter. I didn't look at news. I went and spent my life with my wife and my kids and took the kids to the park and went swimming lessons and baseball lessons. And so, yes, I mean, I have to completely acknowledge I was in the right place at the right time. And I was very, very fortunate to have those opportunities and these potential outcomes. But I've also dealt with all the adversity that goes along the way. I've had the losers. I blew out. I lost jobs. I got smacked. I lost a couple $100,000 trying to figure out how to day trade. I think day trading for a new person is about finding a system and a formula in a market that works for you. I think it's about being self-confident enough that you can take a risk and believe in yourself, and then be humble enough that you can help others, admit when you're wrong, and realize when you're just being an idiot egomaniac and you need to stop and just need to go touch grass.
Donnie, it's been so great to have you on the podcast. I mean, to go back on memory lane, you were at the beginning of some really key moments in trading history. You've been through so many different economic cycles, all sorts of different crazy things that have happened in these markets over the years. And you're still here, right? I mean, I think
I'm still here.
And as we end today, just thinking about the survival of a trader and to see all the different things you've done, just a wealth of knowledge, and just really an honor to have you on here, an honor to know you, and hope everybody takes this advice and these things that you talked about today, internalize them, and does understand trading is a journey of oneself, right? Slow things down. You have time. People don't realize how much time they have, Donnie. If you just think about you and I felt at the beginning of my career, I needed to make money today. And here you and I are talking, when I first started in the market 29 years ago. It's hard to even imagine that, and I feel like I have more time now than I've ever had, but I'm almost 30 years into the business. So everybody out there, I hope you really enjoyed this as much as I did. And Donnie, I think we got to do something with me, you, Pax, and a few other people that are on Twitter and extend this conversation at a different time.
I am totally down for that. We've actually been toying about that for probably 7 or 8 months, and we've just never gotten the crew together to do it. But I got a couple of guys that no one's heard from in years that would love to jump on and tell stories.
Yeah, well, stay tuned.
Some Margie stories, some back month Euro stories, some Jimmy Jude stories, some crazy stories. Yeah, the stuff we can't talk about on podcasts. And we can't record. Yeah.
Yeah. Well, stay tuned, everybody. More to come from Donnie. Donnie, once again, man, it was an honor to have you here today. I can't thank you enough. I wish you nothing but the best, my brother.
My pleasure, dude. It was great to talk to you. Deli, be great.